Hello, everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino, who is here as well. Let's see. William S. says, "Holy smokes."
Holy
And I'm not
smokes.
sure you're not talking about this Smokes. That's one of the rescue dogs named Smokey. But there you go. That was Holy Smokes. Hello, Jake. Hello, Options 22. We can get to that question, Jake, about 60 and a half. Let's give it to the Fed. Great work. But I think Bob will have some comments about that. Welcome, Ken. Before we bring Bob on, we got to do the house cleaning stuff. And the first thing is, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, please like the videos and leave some comments. Was that quick enough? All right. So tomorrow, S&P PMI flash, manufacturing flash, and global services PMI at 8:45 Central. So right after the official market open. Then we have the rig counts, and that's about it. You can see pretty much a lot of red, a lot of carnage today. Lots of Fed talk, which we will get into. I'm surprised this isn't 100% yet. 97.6 on the FOMC, and by the way, we rallied up towards the neutral gamma, and then just sliding back down like a good old slip and slide. After today, by the way, after market close, we had Snap earnings. It's a major one I was peeking in on. And tomorrow morning, not a lot. I will be checking out Verizon and American Express. Maybe peek at SAP. So we shall see about there. Here's your markets, and then we'll bring Bob on. Let me just address a quick question before I bring him. Do I short retracements with closes below 62.5? If there's yes. If there's not a gap in fill, it doesn't matter. It's a short trigger. Now, it's different when you have the gap because you're doing it from the close prior to the gap. Now, just like here, I'll give you an example in the NASDAQ, and then we'll bring on what everybody's waiting for, Bob Iacchino. So today, I think I already flipped these around. All right, here was let me get to a longer term chart. So we have the retracements from the lows on the 17th of April to the retracements on the 20th, okay? And then you see the 62.5. So I watched this area for a potential major reversal, all right, where we reversed before, formed this little double that triggered, hit all the targets this morning, and then we got the flush move. Just wanted to cover that. Now, how that ties into Jake's question, here's the close below the 62.5. Here's the return to 62.5. That is a completely shortable event. And where does it figure? If you're playing along at home, it figures to return to the 87.5% harmonic to the 100% harmonic. That's the zone that I tested out that's statistically relevant, which it did. And then it doesn't mean it has to stop there, but that's the first target area. So you can start lowering stops and then go, trail stuff out, or find your harmonics at lower levels to take your profits. Now, for example, running back up, let's say we got back above. Now we have the retracements down. Let's just say we're not making new lows just yet. We get back above this 62.5, then it's a long event. Now, that doesn't mean you can't get long before then, but that means you have statistical major probabilities to retest this upper zone. Until that happens, especially between the 50 and the 62, is a rollover event if it even gets back there. So that answers some questions there. Let's see. Good afternoon, Sashi. The small flush is here. Yeah, I think we're going to be setting up for the bigger flush soon. Hi, Christoph. Glad to have you. How's everything overseas? Waiting for the bigger one where Apple is in the flush. That will be very interesting. With that now, without further ado, we have the one, the only, Bob Iacchino.
I'm upset.
Huh?
I'm upset.
What are you upset about?
Bill Murray's being investigated for inappropriate behavior. They shut his film down. Has anyone ever seen Stripes? Did you see the Aunt Jemima treatment?
Yeah,
I mean, of course, Bill. It's Bill Murray.
it's Bill Murray.
Anyway, whatever.
So that's what you're upset about? Not
That's what I'm upset about.
nothing to do with the Fed, nothing to do with anything else. You're upset
Oh, the
about.
Fed. Okay, so the Fed was hilarious. Actually, not the Fed. Jerome Powell specifically was hilarious. He almost he almost seems like the bully in the playground who doesn't actually ever get into a fight. And he's like, "I'll do it. I'll do it. Don't dare me. I'll do it." You know, you pulled up the Fed Watch tool, Mike.
Yep.
Check out July.
Let me do that. July.
Now go to the top second, and
No,
not the
there.
main meeting,
Sorry.
but yeah.
Well,
Now check out June.
woo. What are they pricing? Like,
125 basis points by June, according to this.
so they're pricing in like the probability of 350 basis point hikes.
Yeah, or a 50 and a 75, right? I mean, depending on where it falls in. I
Yeah.
mean, it's like, obviously that's what hit the markets or later in the day was when Jerome Powell basically said, you know, expediting the rates seems reasonable to him. It's almost like he's trying to. I'm dropping shit over here. I did a TD Ameritrade just a little while ago. And I actually think that Jerome Powell has cover because of the housing market. So hear me out a second. I think that Jerome Powell is now actually trying to convince the markets that he is James Bullard. So the host said, well, you know, compared to James Bullard, he's dovish. I said, true, but compared to Jerome Powell 6 months ago, he's hawkish as can be, right? Or 12 months ago, wherever you want to make his sort of benchmark. And I think he knows that stocks are going to get hit, but he also knows that there's such a shortage of supply that housing prices are not likely to get crushed. So the actual individual is less likely to get harmed than in any other cycle. Now, that doesn't mean that equity markets don't get crushed. I think they do. And every time I sit here and I think, you know, we get on this live stream and Sasha says, when is the flush? And we're like, I don't know, but it's coming, you know, and we haven't seen it yet. And then the next day there's a rally. And actually 2 days ago, the rally 2 days ago, was 2 days ago or was it yesterday? I think it was 2 days ago.
Probably yesterday.
Okay, the rally we had.
And the day before. Yesterday was sort of a pause, but new high.
The day before is what I'm looking at. I was looking at that and I'm like, okay, this one looks okay. We're getting above a flat rotation zone that has no real direction. We're not above the 200 yet, but that felt very base-like. I mean, not technically, just looking at it, I'm like, all right, you know, we're kind of getting a little rounding bottom. We're getting above the rotation zone. Maybe we'll get above the 200 and they'll cross back up. And, you know, maybe we have something here. Nope.
And it's gone.
And it's gone.
And it's gone.
So I think Jerome Powell today was basically trying to say, I swear we're going to do it. And I asked the host in the interview, I said, let me ask you, how many people that you interview say the Fed is just going to go hike, regardless of what happens to the stock market? And the host said, nobody. Nobody thinks they'll do that. So then I thought after I got off the interview, what if he does? Like, what if he does? What would give him the cover for that? And what would give him the cover for that would be housing prices holding in because there's a shortage of supply. And I actually, a couple of weeks ago, wrote something. I didn't write it. It was a Bloomberg thing, a Bloomberg quick take where I had to record. It's up on Twitter somewhere, and it's on Bloomberg's YouTube channel. And I basically said that I don't think the housing market is going to get killed. I just think the rate of price increases is going to slow, perhaps turn negative, but we don't have the subprime mortgages and we still have a massive shortage of supply. And it takes a long time for that supply to build up, right? That's the Fed's cover, I think. And that's why I think they actually are going to go 125, 150 basis points by July. I think they are. I don't know. We'll see. Anyway, that's where my head is at on the Fed. No, I'm mad about Bill Murray. I'm not mad about anything else.
Hey, Dan Jett. Christoph asks, why did metal and energy stocks get hit so hard today, even though why is the weakest question? He knows why is the
That
weakest
boy,
question.
Christoph.
Christoph, with
Even though it doesn't matter.
you win the
It,
comment of the
it,
day so far.
that's an awesome comment. It's because of the Fed hiking more aggressively into an already slowing economy. If you believe the IMF, the economy is slowing for the next 2 years. If you believe some analysts, we're going to have a recession in 2023. Would you want to own commodities if we're going to have higher rates and a slower global growth? I wouldn't.
So is the commodity cycle over?
No, I think it's a pause. I don't think they can control it. I really don't. I still, if I'm right that the housing market is the Fed's cover, when does that cover erode? Probably in 2023 under the guise of a recession. They turn right back. And you think about how many times they could tighten this year. If they tightened 50 basis points for the first 4 meetings and then tighten 25 after that, then we get a recession in the second half of 2023 and it's QE 12. What number QE would this be?
I don't know.
7? 6? Are we counting Japan?
Oh, well, I see. If you have, Japan's been at QE for decades.
Japan owns 10% or more of 90% of the companies on the Nikkei 500 in terms of their shares.
That's scary.
Bank of Japan. 10% or more of 90% of the companies.
Christoph Lagarde's comment was also hilarious. For goodness sake, let's wait until we have the data and then we'll move on to decide on rate hikes. What's more data does she freaking need? I mean,
what does that remind you of, Mike? It reminds me of Nancy Pelosi saying we have to pass the bill before we can see what's in it.
I don't know. If you need more data at this point, it's just mind blowing.
Yeah, it really is.
What was your thoughts about the comments about the bond market?
I didn't see those, to be honest.
What was that? Oh boy, I gotta.
Where's the comment? I'll tell you mine.
Does somebody have that? No, I was reading. I just don't want to misquote it. If somebody has that.
I can look for it while you're talking.
Yeah, let me just see what else. Yeah, if there's a major comment about the bond market is not the place to be, and which actually could be a short-term bottom in the bond market with a contradictory indicator. Bond market.
Bank of America yesterday or day before yesterday said it's time to buy bonds.
Yeah, and there's definitely something with bond. I mean, I know the high yield stuff also got utterly obliterated today. Where is it? Boy, I should have saved this.
Let's see.
It was Bullard. Bond market now is
that's Bullard. Okay, that I saw. Go ahead.
Yeah, bond market now is not looking like a safe place to be.
Well, I think that's what the guy who was interviewing me, OJ Rennick, I think that was his point. He goes, Powell was not hawkish compared to Bullard. Well, nobody's hawkish compared to Bullard. And I think I remember Bullard being more of a dove, I think, in past years. I guess he's just a guy of extremes.
Rich, bond market offering real yields for the first time. Who knows how long? Well over a year. It's going to be negative for the market.
It's been about 3.5 years, Rich. I'm sorry, 2.5 years in the U.S. Longer than that in Germany. That real yields have been negative.
EU monetary policy is absolutely ridiculous. By now, Italian government bonds have lower yields than U.S. I wouldn't touch. Sorry, Bob. I wouldn't touch Italian.
Oh, I'm good with it.
Bonds.
I'm good with it.
You know, my money be a Ferrari before we go into Italian bonds.
The only bonds I like right now is state of Florida bonds.
State of Florida bonds?
Yeah.
Let's see. What else do we have here? Let's see. Yeah, I saw that Wavy Musk, Tama Bravo in talks to be partner on Twitter bid. Have to peek in on that. What else do we have? Williams says, Bullard is not a dove ever.
That is not true.
I think he was fairly dovish for quite some time.
He was.
So
Go back to like 2016, 2017. He was very dovish.
where do you think the best place to park your money in the next few months?
Probably precious metals. And I don't really say that. Like, I don't think people should park all their money anywhere, but probably precious metals. Like, I can't, that was another question I got today. I can't think of a reason to exit a gold long position. I really can't. Maybe under the couch, William. That could be right. Um, I really can't. I can't think of a reason to get out of a gold position. I would understand people waiting for some sort of a pullback to get in one, but I think probably gold. And I don't really, I can't remember a time in the last 15 years where I've said that.
Yeah, I still like the precious metals and some commodity, even stuff like some commodity plays like the uranium play and everything else. And
Yeah.
again, you can actively trade around a core position, but you know there's going to be somewhat of a bullish bias on those. Like the energy situation, even with a slowdown from the nuclear standpoint, is not easing up soon. Christoph
Right.
put a question in the Discord server. By the way, if you are on there, there is a section questions for Bob. Is a yield spread between U.S. and European government bonds sustainable, e.g., U.S. 10-year at 2.9 versus German at zero point 0.9 or Italian at 2.6? Italian solvency is certainly much more questionable than U.S.
Is the yield spread between U.S. and European government bonds sustainable? No, it's not. The question is though, Christoph, that's the one in the comments right there, Mike. You can put it up.
Oh, yeah.
He moved
I'll
it into
put
the
it back in. I
comments.
was actually looking in the Discord server when he put that up, so I didn't see the question.
Um, no, it's not sustainable historically. But keep that in context, Christoph, because things like this can stay skewed for for a long time. Essentially, now is a great example of how it can stay skewed based on the war between Russia and Ukraine, because obviously the EU is going to be the most affected by this in terms of G7, right? So you and Lagarde obviously is being ridiculous, as I think we agree in this particular live stream that Lagarde's being a little ridiculous. So you can have these yields stay low, being pushed low artificially, but otherwise, no. Generally, if you put up a yield chart of like the Bund and the U.S. 10-year, I mean, they're lockstep. You know, they separate a little and then they come back together. It was actually a very popular trade in like the early 2000s where people would do mean reversion trades of Bund versus U.S. 10-year.
Rich, what's going on with Snap? I don't know. They missed.
Yeah, they
And
missed bad, but I thought the stock was up. Am I
it is.
wrong?
And they guided lower. Like they guided worse, and the stock's up.
Yeah, your guess is as good as mine.
I have no idea. I have
Normally,
no,
when that kind of thing happens, Rich, it's because people expected a worse miss than that. But I would have no idea. If Snap's not something I follow because I've never once even used the product.
and they guided lower for second quarter revenue too. So I was really watching their guidance, and it's like, okay, it's rallying.
Stock's up what? Almost 5.5% in the post market.
So who
Yeah,
knows?
that's a little crazy.
Who knows? That's probably going to be a good gap trade though.
Probably.
So gonna keep an eye on that. No one wants to be holding these tech stocks anymore. Well, except for
Nope.
Snap.
Except for Snap.
Many are back below yearly lows after today, like Shop. Yeah, Shop. There's your.
Tech's ugly, man.
Yeah, here's. I mean, we remember this is just. Yeah, I just want to recap this because we're getting a lot of new subscribers here, with especially with Sterling's Twitter activity. We had the close back. Wow, the official close back below 62.5, 27th of January. Favors the retest of the 87.5 to 100% of this whole up move from the March 20 lows, and we just went through the 87.5. The probabilities were plus or against the weekly and daily rotation zones. So you can see here a little bounce back rally into the weekly rotation zone, rotating lower. So again, this is why if you learn a couple things, you can really help at least avoid putting yourselves in bad positions. Any thoughts on why Tesla's so hard after a great earnings report? You gonna get me started?
Don't you still have? Do you still have a whole live stream about that, Mike, or
No,
no? You included in other
no,
things now?
it turns very ugly. Oh well, there's enough people. People I've talked to, they're like this earnings report doesn't make any sense.
Well, so it's another one of those. I
There's
don't want to use
literally
the word
numbers.
manipulation.
There's numbers that literally don't make any sense in the earnings report. And everybody I've talked to who has half a brain is like, I've gone through the numbers and it makes no sense. So either they've done something that nobody else can do in this environment, which all the Tesla bulls say, see, yeah, they do stuff that, or it's could be a little bit not honest. Let's put it that way. So again, it started getting digested. Then you had the tech sell off today. So you had the ramp off up. Then you had the tech sell off. It hit that gap fill we talked about this morning, and then if you're playing along at home, also if you looked at my Tesla chart, we started getting the sell off and then pausing at that 50% level, and then you get the close below 62.5. So I'm watching for that gap fill tomorrow. But why? I think the earnings stuff, and no, I don't think people bought what Elon said, especially with the Shanghai plant shutdown. You had that article out of China today still that says they're constrained on parts. They only have enough to last them 1 week. And with Elon saying again, we're gonna second quarter Shanghai production is going to be the same, and it's been closed down for how many weeks now? There's enough stuff that it's just nothing is passing the smell test. And then you had tech sell off and growth sell off again. If you look here at our ratios, remember you should put these up, but you see, Tesla's also, they've been flat for a couple of quarters with essentially deliveries. You have things shifting out of growth favoring value. Again, growth down big versus value. One metric, growth down big, even below these prior lows. And you have stuff like mega caps back to their most recent lows in February. So separate from anything specific to Tesla, you have things rotating still out of growth on these market sell-offs. You have things rotating out of mega caps, which I do like the comment from earlier, which I forgot who did that, which waiting for Apple to really start participating in the sell-off. Who said that?
That was either Shashi or Wavy.
Yeah, Sashi said it. Waiting for a bigger one where Apple is in the flush. Because, yeah, was Apple down today? Yeah. But this is holding up way better than most stuff. So what Sashi's talking about is when Apple really starts getting hammered, watch out below.
Let's address Wavy real quick there, if you could.
Go
ahead and do Sean. Go ahead.
John, what's my bullish price target on Tesla? I don't have a bullish price target on Tesla. I have a bearish price target on Tesla. You don't want to know where that one is, because I've said it before. But we're going to be trading in, especially with these market conditions. Once we get starting the bigger sell-off, once growth keep getting hammered, at some point Tesla will break and be sub 500. So especially as it's losing its growth narrative too. Let's see. Good to hear your thoughts. I just don't understand. Every analyst is saying, well, quarter, but it sold off 90 points today. Well, I already did.
I wanted to touch on that a little bit.
Something isn't adding up.
So I was on a TV spot. God, it had to be 1999, maybe 2000, something like that. And I was on the screen. This guy from JP Morgan, I can't remember his name right now. But anyway, he was an analyst, okay? And they asked us about the British pound. I have a chart somewhere in my old presentations where I've talked about this in speeches before. And I said the British pound was going, I don't know, 40 points higher. It doesn't matter. I'm sorry, 40 points lower. And he said the British pound was going like $2 higher, right? So within like 3 or 4 weeks, my target was hit on my short, right? And then it spun around, and over the course of like the next year and a half, it went to this guy's target, right? So we were on again about, I don't know, maybe 2 years later. And him and I were like not arguing, but we had a disagreement on something. And he goes, well, it also hit my pound target last time I was on with you, Bob, and you thought it was going lower. And I remember I didn't say anything because I wanted to take the high road, but I remember thinking, analysts, my trade target worked, right? But analysts don't have money on the line ever, okay? So analysts will go blowout quarters. You got to buy it. And when it drops 20%, they don't care. They just lower their price target. All analysts are trying to do, and I understand some of them do really good work, but all analysts are trying to do it like price targets and talking about the earnings of different stocks is at some point to have it hit their target. So they can go out to their bosses and say, hey, my price target for Tesla, I know I moved it down with Tesla, but it eventually hit my price target. So I'm pretty good at this, right? This is why Mike and I preach price action so much, because it can be a blowout quarter. But what Mike is trying to say, and Michael can talk to this in more detail because he'll remember more. There was one time years ago where it was proven through internal emails that Elon Musk stopped paying bills for a particular month to jack up their cash holdings for the next earnings report. I assume, Mike, correct me if I'm wrong, you're not accusing him of doing exactly that, but something in the earnings report doesn't add up. And usually when that happens, it's likely to come out in a future earnings report or in leaked emails somewhere as to why they had such a good report and the actual numbers just don't add up. And I suspect that's why the analysts come out and go, wow, blowout quarter. And then the traders who actually have money on the line look at it and go, you know what, I'm going to get out because this doesn't add up. Does that make sense, Wavy?
And this is also why you got to trade the price action. Okay? There's nothing you can't. All right, we were just talking about Snap, right? We're like, they guided lower, they missed, and they're up. Well, I don't know. I think they'd be down. Just as there are a lot of people, why is Tesla selling off? Well, it blowout quarter. You got to trade the price action, period. Sterling's late. He was selling cars.
Sterling, I got a freaking aftermarket warranty program for you. You really want to get on board, buddy.
Genomic stock, it just says $3.99. You'll have to clarify that. It's like we do the opposite of what makes sense, and we make money. Trading doesn't have to make sense.
Right.
That's why at the end of the day, I got to trade the probabilities, and the probabilities are just that, probabilities. I got to trade the price action. Like today I was going on, I said we could still see a couple more up days in the cycle. Well, then you have this. Then we hit targets, and you had this kind of price action. Let me take off the stuff. This. Once you start to see this, what are these? I've talked about these many times. Momentum bars. Okay? Momentum bars. NASDAQ was beautiful. So what has to happen? Okay, I see, even though the cycles say we could be up for a couple more days, we're getting momentum bars. There's just not standing in front of this. Then you get the close below that 62.5, and it's like, there's no trade other than to be short. There's no trade. So it doesn't matter if something, even if I thought it should keep going up. It doesn't matter. You have to trade what is. And that's why also predictions are only worth what they're written on. Because I could say, the NASDAQ, it should be at, 12,900 or 12,200. Okay, well, how does it get there too? Could it get another weird bounce first, then go down? Does it tank down there instantly? A prediction is not a trading strategy.
On the point of making sense, um, think of markets like a tornado, right? The tornado is coming right at you, and then it makes a right hand turn and hits Mike's house. Like it just doesn't. You got to protect yourself either way, right? You don't know which way it's going to go. Tornadoes can actually go into headwinds and spin the wind around. I mean, they don't. If the markets had to do what makes sense, we wouldn't have been up these last 2 years because that didn't make any sense. Given that it was artificial money printing, all this stuff. I don't want to call it manipulation, but it was absolute manipulation. A lot of the market moves over the last. I mean, hell, I'll even go back to like 2009, 2010. Really don't make sense, but they go anyway, and you just do the trades, and that's it. You know what makes sense? Taking every high probability legitimate trade you see, executing it correctly as per your method, and then letting the probabilities over time compound your trading account. That's all that makes sense. The rest of it, who cares?
Oh, that's what the Tesla price target. His is 399. There we go.
Oh, hey, who asked last week about doing B of A because they thought travel was going to recover? Who was that?
BA? You mean Boeing?
Boeing, yeah, I said B of A, but somebody said, should I buy Boeing because I think travel's going to rebound?
That was.
I just want to point this out because our answer was don't buy Boeing, buy United, buy Southwest. Well, there's Boeing.
Yeah, then here's
United.
I mean, I'm still going to watch for a partial gap fill with this price action, but that was up huge.
It was about 5 or 6 days ago.
AAL?
There was around. Yeah, there's AAL. Look at Love.
LUV is, we're going to ask about, I think somebody was asking about this.
I like this chart, by the way.
Yeah, Love. Let me just look at the weekly. Love, I like the daily a lot, especially a pullback back to the 200. This is a really nice chart from my perspective. You got all this support coming up into it. It broke above key resistance.
Yep, love this chart.
And now you're, even with this short-term topping tail, this is looking like a nice little potential pullback trade.
Mike, what do you think? I don't love that we're not through the 200 week, but I think the daily can actually build up enough momentum to sort of power through it.
Seeing we got the close ball of 62.5 on the gap play, so this is great. Watch for the probabilities of that gap play, Phil, and then a bottoming pattern. But the 200 week, it's.
I mean, we failed against it, but it's pretty flat.
Yeah,
the daily can actually build up the momentum to get through a flat 200. I mean, it's not as strong when it's flat.
No, it's not. But you see,
that's my thought process anyway.
Yeah, this, especially with a pullback and some kind of bottoming entry signal, I'd love that play for.
Yeah.
I mean, airlines are also guiding higher with travel still.
United Airlines said they'll be profitable this year. That shocked me.
Let's see what else. Christoph on cars. Again, thank you for being here. And I know it's late there on cars. I'm trying to rent a car for summer holiday in Spain. It used to cost 15 euros per day. Now they want 90 to 100 in the cheapest, smallest car.
Hey, I have a friend coming down here, Mike.
Okay.
He's coming down April 30th through May 7th. He got a Hertz rental moving van because it was cheaper than a car. He's literally going to be driving around in one of those Hertz, one of those tall vans that look like a Mercedes Sprinter or whatever. Yeah. It's one of those. It literally says Hertz moving. He's going to be driving that around for the week.
Well, he should pick up some side gigs.
He should.
Which makes me think maybe it's time to go buy some leisure related, vacation related stuff. Do you have anything technically strong? I mean, the airlines, I haven't done a lot of looks yet into hotels. I'd have to do a little more research.
Carnival's Carnival's okay. Carnival Cruise Lines is okay. It's not as strong as this love chart, but it's not bad.
So we have to look at stuff. I asked about a potential weekly double bottom in LUV. There, oh, this one.
Sloppy, but it's
Uh,
there.
let's see where that came with the harmonic. Yep, didn't quite hit the final harmonic, so it is very sloppy with this X with those little rotations in there. But technically, let's see. Yeah, you can use
Oh,
first and
that's
second
good.
targets are in there.
That'll
And
be a rough one, but it'll likely play out.
look at the first target though, right at the end of this clear path.
Yeah.
So yeah, I definitely be trading off those first and second targets. And it hasn't officially triggered on a weekly close yet because we're to have to see where it closes tomorrow. But again, even if you get the pullback, it's confirmed at this point. So even with the pullback, I'd be looking for the daily plays. And look, there's your daily target. You still have a gap here left behind. And then you have this target in this prior topping area. Yep. Japan CPI today, do you think will affect the yen?
Only if it affects Hirohiko Kuroda and the Bank of Japan. If it affects them, then it'll affect the yen. There's just no end in sight to this down move for the yen unless the Bank of Japan gets off their ass and does something about it. And so far, they've basically said keeping rates low and keeping asset purchases is the way you fight deflation and inflation. So CPI doesn't matter if the Bank of Japan doesn't think it matters.
Vail came down hard with the Alcoa announcement today. My puts are printing. Well, great. And then you have the
Nice.
longer term potential double top. So we'll have to keep an eye on that. Not yet confirmed or triggered. And that 200 is right there. So that's going to be very interesting.
Mike, can I touch on two things that are in the chat here, and then I'll let you guys
Sure.
get to some other stuff. First of all,
Yep.
genomic.
Genomic stock, yeah.
Yeah. So, can you put up a crude chart? Because in this last podcast, by the way, thanks for that. And please, guys, spread that podcast around because, again, we were asked to create this podcast by a very large firm that I'm not going to talk about yet. It was CME Group. And if they like it, they're going to fund it and then it'll go on forever, basically. They're going to sponsor it. So, and what I said in that particular podcast, crude oil had settled somewhere around 106, somewhere in that range. It was Friday. What was the settlement on crude oil on Friday? The 15th.
On Friday the 15th.
I'm sorry. It was the 15th. So it settled the 14th. What's the settlement on the 14th?
Settlement on the 14th was 106.95.
All right. So I said I couldn't find any good. What I said in the podcast, if you haven't listened to it when I put my trade up, was I couldn't find anything good that I wanted to trade in commodities, and I wasn't going to let the market force me into a trade. But if crude oil pulled back to 99.50, I would get long it. And Jim ridiculed me, and I got ridiculed all over Twitter about, oh, you expect it to pull back $6? It got to 99.88. So I didn't, and in 2 days, right? So I didn't get the trade, and I'm going to go on tomorrow's podcast, and basically say, so I'm going to pull that trade out now because I don't really like the way the price action is playing out anyway. And now I'll take a follow through trade if we can break through that trend line. But I don't know what I'm going to trade tomorrow. Maybe love. I don't know. But anyway, so spread the podcast around, send it to people, see if they like it. You guys are all involved in markets. You know people are involved in markets. Just tell them to play it in the background and go have dinner and watch a movie in the other room. I don't care if you guys actually listen. I just want the numbers up. And the second thing is, can we actually talk about crypto real quick?
Sure. Well,
If you
that
could,
Williams crypto, please.
Can you put up NASDAQ and then overlay a Bitcoin line chart in there? You know how to do that with TradingView?
Yeah, hold on. Uh let me get a new. Oh, don't make my life difficult. Trading View.
Why is it always doing that to you?
Yes. There was my snap alert. uh let's see, because I wanted to do this Nasdaq, and then let's.
You put that plus chart and do BTC. I don't care if it's futures or whatever it is.
How about we do Bitcoin futures
That's fun.
front month? Here you
Yep.
go.
That correlation is just getting stronger and stronger, is my point. The correlation between NASDAQ and Bitcoin. And what's happening with NASDAQ right now is we're getting weakness. I mean, look at that. And
Yeah.
as we get closer and closer to the front of this particular chart, it gets tighter and tighter.
Mm-hmm.
And that's troubling to me because obviously the NASDAQ, as we've talked about, technically, as per general economic and stock analysis, is in a bear market, right? It was down 20%, has not made a new all-time high. So it's in a bear market, right? So that means I don't know if crypto is in one. I don't know if it's reached down 20%. Looks to me visually like maybe it has. But if this correlation doesn't break, then I just don't believe in Bitcoin at all anymore because it shouldn't be correlated to an equity market this tightly. It really should not. The promise of blockchain to me is very real. As someone who's trying to get a clean title on a property in Arizona that's trying to be sold, I wish properties were on the blockchain already for the last 50 years. Um, but if this correlation doesn't break, if it doesn't just separate and get to basically zero, not positive or negative, I've lost my belief in crypto because that basically means that people who like tech stocks like crypto, and when they're selling tech stocks, they're also selling crypto, which kind of takes the story away from me. Anyway, that's all I wanted to say about that.
Well, let me just take a look back at just pure crypto. By the way, William, you say I might get $12 calls down 50%. Should I cut? First off, what are your calls in? And I always make, just as a blind thing, if I'm trading options, I always have my analysis done on the underlying. Because the underlying, if it broke a key level, did it break your stop loss? If it broke your stop loss, you shouldn't be in the calls anymore.
Right.
If it's just an overreaction in something, or a major change in implied volatility, but the stock didn't hit my stop loss, well, then that's a different story. So I need to take, all right, Hood. So we could take a look. Hold on. Let me just look at the crypto stuff. Yeah, this was a brutal sell off today again. Could not even get up that 50% level, rotating back down.
Mm-hmm. That's
Ugh.
ugly.
And yeah, that's ugly. I'm now watching with
What
this.
chart is this?
That's Bitcoin.
Okay.
Again, let's do it from these lows. You see it bounced off the 62.5 before. That's when we get a close below 38,650. I go very, very bearish. Ethereum, your key level, again, rotating back down, could not get a close above the rotation zone. Ethereum, what shifts me to very bearish is a ways off, but if you start breaking down below the 50, minor bearish, and then below about 26.92. So minor bearish would be 28.71, major bearish 2700, roughly 26.96. Because why that then favors, and that's on a closing basis, favors a return to the lows back at the end of January. So, any other comments, and then I'll take a look at Hood. Bob?
Nope. I'm good. Unless somebody has a question for me, I'm gonna let you guys go.
All right. Then I'm not seeing any more questions, so I'll take a look at anything else anybody wants to look at. And thank you for being here again, Bob.
Yep. Happy to be here.
And we will, I guess, see you next week. Unless
Yep.
something happens overnight and the markets tank.
Unless something happens overnight and the market's tank, and then I'll come in on the morning stream.
Perfect. All right.
All right. All
All
right,
right.
guys.
Thanks.
Cheers, everybody.
All right. Back to Mini Mike. Here we go. Hood. Well, I don't know what your stop loss is because, I mean, if you start breaking down below 994, not good. But you are against the daily rotation zone, and I think I've covered this before. You're against the weekly rotation zone. So, and you had a potential double here that never triggered and turned into nothing now. So that was the only potentially bullish play there was, but it never even triggered. So, personally, again, can't give individual financial advice. This is not a healthy chart long term. Again, I don't know what your call position is other than you're down 50%. You have $12 calls. Okay. So I don't know what month it is. It broke my stop already, but it flushed so quick. Once it breaks your stop, then I'd be out. If your stop's broken, you got to be out. And longer term, this is not a healthy chart. You now have 1, 2, 3. Now with this return, you have a quad bottom. So unless you get a really nice bounce play off this, that would be a new trade for me. And what's the only thing that could make me bullish, at least even on a short-term pop? It would be above 12, but it'd have to get there first. Again, owning $12 calls would be front-running something off of the only bounce play was this, and then it rolled over in the rotation zone. Next week's expiry, then you're just going to... You're fighting a lot of theta kicking in. So you're fighting an uphill battle with that. Especially if the NASDAQ continues weak tomorrow, you're fighting an uphill battle because any bounce, you're then fighting your theta decay. You know, so I particularly wouldn't want to still, if it broke your stop, you have to stick with your stops. And this could just get worse because if it does break this 996 level, then it could be potentially bad. And yeah, you got earnings next Thursday. But unless they do something spectacular with earnings, you know, it's a gamble play then. It's just you don't have a great long-term bottoming pattern. You're just leaning against support here. See, now my play, if let's say you said I had to take a bullish trade, my bullish trade would be down here with a very tight stop. Okay, but we have cycles flat, we have RSI not yet over, it was oversold, you got a little divergence. My trade would be down here with something like at the monies, again, educational purposes only. All right, if we started even getting more oversold and I got an intraday bottoming pattern with a super tight stop. Why a super tight stop? Because you break below this level, watch out below. That was the only play would be a short-term bottoming pattern, and I'm talking intraday against key support, and I'm not recommending that trade again at all because why? You're still against, on any pop, you are against the daily rotation zone and the weekly rotation zone, and Hood's just getting smashed. So I'd rather put something in my probability favored and trying to fight. This is, again, trading against the higher time frame rotation zones are like swimming against the current. Yeah, you can do it, but you're going to get tired really quickly and you're not going to make much progress. So why do that? In my book, that's just my opinion. I'd rather find things that are going up to trade than to try to, unless I get a great bottoming pattern like a double bottom or something else, you know, like a very key entry signal, then versus just trying to pick a bottom. SPY bearish flag. That's sort of an ugly flag pattern, but SPY hit the first little area here and then rotated down. So the stop loss in that pattern is now over. That I wouldn't put in a bearish flag category. That's just an ugly. What's more interesting to this is it hit the first target. It almost could turn, if we get a further down move tomorrow, it turns into like almost a double shake and bake pattern. Because this was ugly in the futures. Just brutal with those. Again, here's your warning sign. And if you want to start, here's another thing. Besides, you don't get very little overlap in bars and very little pausing areas. Here's another thing. When you put up the 5-minute rotation zone and you can't even get until this little bounce, you're hugging the 8 lower. That is bearish price action. Okay. And then look at the bounces. 5-minute, which means, you know, I switched to the 15. Look at your 15. Boom, boom, boom. And then you don't even reconnect at the end of the day. That is super bearish. You don't want to fight a move like that. NASDAQ also closed below the 62.5. Yeah, I was going to touch on that before. I did put that back up here. Let me take off these little ones right here. It actually closed below the 62.5 from this recent up move. So that favors now, longer term with the NASDAQ, favors a return to the 13,233 area to 12,930 area, the most recent lows. And then if you also do it from, we're back below that one. We've already closed back below this one. So even on the overall thing, we couldn't remember it rallied back into the 62.5 level between the 50 and 62, where we watched for that reversal, and then it's just sold off since then. So there is just nothing. Now I start getting more and more bearish aggressively, especially in the NASDAQ, and today's close below the 62.5. And on a closing basis, if you look at your close chart, which is handy to look at a close chart. So you've just broken to you had this little support area where it tried to bounce off of, and you closed to new lows. And you're also just below, see this other prior close back on the 9th of March, you've actually closed below this on a closing basis. So not good. Now watch, we'll bounce tomorrow. Overnight, let's just take a look at a couple key things, and I will wrap this up. Overnight, just your roughly key supports right at this prior 62.5% harmonic. So your major resistance 13,800, 13,814. Minor resistance is 13,729. So that's what I'd be watching for overnight on any bounce. And the lower areas then to watch for now, if we start to continue to sell off, 15,537 to about 15,524 is a harmonic cluster. Then below that is 13,334 to about 13,370. S&P, again, closing below the 62.5 on this recent run-up. It doesn't have much to go before it hits these levels. But then on your other levels, the next major target sitting right at the 50, but your next major sell-off area is this harmonic projection 43,321 to the 62.5, 43,317, and you close below that 43,317 area. Sorry, moving some windows around. Then I'm watching for that return back to 41.92 to 41.27 with an intermediate little target of about 42.86. Dow even down 116 basis points. But remember, the Dow, key thing at this point with the Dow is that we have this potential double top in play. This double top is still completely valid, and that would be a close below 34,000. Then I'd be watching for this low area to be retested. So let's just peek in at the Russell. I mean, this was a major reversal too at the Russell, just missing that harmonic, and then the selling pressure in the Russell. See, it's what I talked about again. Here's your 5-minute rotation zone. Look at that. When you see this, you don't want to step in front of it. You want to go with it. And so that's just here. Not much to do there at all. So that's about it. Snap is killing options both sides. Again, I can't watch that during the live stream, but what's this thing doing? Is it just bouncing around after hours? Wow. Look at that price action. Oh, geez. That's sort of funny. That's some funny price action. What else do we have? NASDAQ VXN breaking higher today. And we'll peek at the VIX too. Now the VIX, what's interesting is I said this morning it closed below the 62.5. It favored a retest this area. We did not get it, got the strong reversal, but this set up now for a potential double bottom just above. Remember, I've been watching that 25 level. 25.38 triggers it. So you start getting a trigger in there, we could definitely be hitting that major, starting to get some major selling pressure over the next week or so. We shall have to see, but that's now, pay attention to this double bottom. This would be just one side is sloppy. This is the same side bottom. This is the other bottom. The VXN, why did I hit another thing? Here's your VXN, which valid double. Your aggressive targets would be here. Let's just go with the conservative targets for right now, and that's triggered. 33.48, 33.68, 35.88. I like this a little better because there's a little hitch in there. And you're into a clear path move. So you could definitely see, because and patterns like this are completely valid on the VXN, the VIX. They still have, probabilities, and I did do a lot of research on them with these things, just as like they're valid on ratios. So, this favors. Is it guaranteed? No, but even if you get a pause or a slight little pullback, I'll be watching for the higher prices, and that does not bode well for the NASDAQ. So thank you, Paul. Thank you. Big shout out to Paul with the VXN comment and triggering that double. And I know it sort of looks sort of flaggish, but I'd be going with the double probabilities. Facebook, are we still calling it Meta, or is it back to Facebook? It's still Meta. What did I have? What was that? Oh yeah, we had that little short-term play there. Coming up, wow, I haven't looked at Facebook since we hit this little up here with that harmonic cluster and rolled over again on the 4-hour, but that's ugly. That is ugly. Ugh. Let's come. Oh, our target's already in place still. I'll be watching for another potential breakdown play in this. 161.01, 136.19. Again, this is another one. Here's your weekly. Remember, broke down below the 200. You're still into this advanced clear path move, returning to the 200 and the weekly rotation zone, weekly rotation back down. So keep in mind, you still have an advanced clear path move without a lot of stopping points in here. So 160.01 could really be in play soon. Oh, don't apologize. I called it face. It's still, the ticker is still FB. It'll always be like Facebook to me. I'm still going to call it Facebook. What's a meta platform? Ugh. Yeah, it's still meta. I thought they were going to change their symbol, but that's out the window. All right. So that. Oh, by the way, the custom. I wanted to touch on this. The custom mega cap. This Apple plus Microsoft plus Tesla plus Amazon plus Google. You see the analysis here. We had that double top, which hit all the targets. A little bounce back to the rotation zone, rotating lower, closing below the 62.5 today. So probability-wise, that favors on this custom index of these mega cap growth things to retest this low area. So I also wanted to point out that. So please, I mean, is anything guaranteed? No. Statistically, it favors a return to here. I have to give that little disclaimer because somebody would say, even if it's 90%, there's a 10% chance it could be wrong. But I would not be rushing in, especially short-term bounces. I would not be rushing in to be trading a lot of these mega caps. And again, big comment again back to when Apple breaks, it'll be interesting. Can we check the US dollar? Sure, Rich. Anything for the regulars. Anything. So into the rotation zone, rotating back up. Again, there was a little buy signal here back at about 152 intraday today. And that's nice. Again, educational purposes only because the stop can go right below the daily rotation zone. So I'm at least watching for a return. And again, on the shorter term basis, remember, you can keep doing this on different time frames. This is a little go-to thing. Where did it also close back above the 62.5? So it favors a return to this recent high area statistically. Plus, you came out of the daily rotation zone. Plus, there was a %B 4-hour buy signal. So there was some interesting bullish price action in the US dollar today. All right. Every time I think there's a good buying op, it just sells off even harder on the next leg down, which is part of a longer term bear market. Remember, we still have those long-term signals in place, and this is what makes it very challenging to trade these things because you get the rip your face off rallies, and then 2 days later, it's like everything's trash again. How about the daily double bottom and MMM still technically good play in this environment? Well, let's see. I'd have to say it's still completely valid. You're just stalling against the 50. It's still a completely valid trade. Well, you might see a slight little pullback, but it has a long way to go before it invalidates this trade. Okay, I mean, your stops on a closing basis, you can use the 62.5 from I do it from the double pattern, but if you wanted to make it a little closer, you trail at the 62.5. Why would I trail there? Because think about what I just said, a close below that, and that's a close below that. Then it would favor a return to the bottom area, which then would favor a triple bottom. So I wouldn't want to still be in a double bottom if it closes below that 62.5. Your early warning sign is if it starts breaking below about 146. But right now, this is just, again, you're chipping away at the 50. You got a fair amount of support in here. So is it still completely valid on this pattern? Yes. Is it guaranteed? No. I wish there was something guaranteed in trading, but there isn't. So good question. Good question, Christoph. You got to still go with the probabilities, and nothing's changed with that. It's just triggered, moving sideways, and you see here on the weekly basis, it's confirmed on the weekly basis, but not triggering, and you're trying to burn off this weekly rotation zone also. Now, it is slightly lower probability because it's in the weekly rotation zone, and I'd really be raising a stop at this first target aggressively. Going to trade it day by day until things clear up for good, ready to wait a few months if need be. Yeah, we could see remember, we've talked about those long-term price targets, and those are long-term price targets. Could they get there in 2 months? Yeah. Could they get there in 6 months? Yeah. Do I have a timing on that? No, I talked about that the other day. Any system I found that it literally has timing parameters over 8 weeks is not, I could not find any statistical relevance. And that's looking at hundreds of them for the exact timing of these things. So we have the probabilities, but we don't have the long-term timing of when it would get there. I wish I did. I wish I could tell you this will be over in October. I just pulled that out of my butt, so don't take that worth anything. But I don't have those probabilities. All I have is the probabilities are for much lower price action still. And we're still going to have to endure those rip your face off rallies. That you're like, where did that come from? Is everything over? And then you get the selling pressure again. You're welcome, Rich. You're welcome, Christoph. Hey, Mike, will you do spot? I think it will retest the low of March 2020, which is around 85 to 80. Sure. Spotify. All right, you got the double cross of the rotation zone on the daily, which means you got the weekly return. I can tell you already we got the return to the weekly, because when you get the double cross on the daily, that just means you get the higher time frame correction. You broke down. You see the weekly rotation zone? This is why I'm telling you it's so tough to trade against these, because you had 3 up weeks and then kaboom, destroyed. You still have a little support. Little support right here at 104 to about 110. You have a little support window here. But you get below there. Let's do the harmonic projections. Let's do the major harmonic projections. This is where it's so helpful. So the major ones were at 67. I don't know if you'd ever hit 32. You're at 67. Now, the most recent, we don't have a great pausing bar yet, but we're going to do the most recent swing. We could do it to this pausing bar. And that, look, all right, we're using this pausing bar. I wouldn't use these lows yet because we don't have a pausing bar, but this is a pausing bar area. So you break below this 104, intermediate target would be 94.78. I just go off 95. And then you have a cluster 67.77 to 71.35. So if I was doing a long-term play, you know, let's say I had some major long-term put spread for the next 3-something months, I'd be using these levels to key off of my lower put. Okay? For shorter-term trades, I'd be again trading this breakdown of 103 and then looking for this 94 and 78, 95 area for targets on that. But that target I would not be doing as long as it's holding this 103.29. That's my first little area of support. But that's how you do it. And this is a great way. Reverse harmonics also, since it IPO'd back in 18, remember? Then it sets the lows in December 18, retests, moves up, and now retesting those lows. So it will not be pretty. It could be, it's already wiped out everybody who bought on the IPO day and everybody who didn't sell in the run-up. And then everybody who even got and somewhere in these lows areas, if we start breaking that, they're now all underwater. Then what happens is you start watching for the return to this area because everybody's like, well, I'm not going to keep holding this dog because now I'm even underwater. So that's where you get the bounce back to these levels and then the next rollover move, push lower. You're welcome, Wavy. You called it sell from last fall and never screaming a new all-time high. Yeah, the timing is also difficult in this. I mean, like today, I said the bullish cycle still favored it, and then we just got obliterated. So this is where one thing of advice that even if you have a great bullish pattern, you start seeing, I'm going to keep stressing that, you start seeing this, mind your stops and don't step in the way. And in these markets, you have to be willing to pivot very quickly, both to the bullish and to the bearish side. Now, bearish, again, longer term, very bearish. But we could get, look, again, you have these rallies and then you get the sell-offs. So it's hard. It's hard. You're welcome, Wavy. You're welcome, John. Let's see you. Yes, we will be on tomorrow morning. I am going to wrap this up for now. Oh, it's been, what, an hour, 15 minutes nearly. So, hope everybody enjoyed this extended session. And if you are new here and you got something out of this, please do consider subscribing, ringing that bell, and hitting that like button so you know when we do live, especially if something happens intraday. Because I've been doing breakfast and dinner. We'll call them breakfast and the dinner show. You might have to, if something really happens during lunch, I always might pop on, especially if we're hitting key levels or I see something to really watch for. So that's why you should subscribe and ring the bell, because then you'll get notified if we do emergency live streams to try to help everybody out. Thank you again for being here, and I will talk to everyone in the morning. Bye for now.